We will quickly move on to our next speaker for this morning, next and last speaker for the morning, who is the CEO of Minet Uganda, Mr. Maurice Amogola. As Minet, as many of us would know, is a Pan-African firm that specializes in insurance and risk management, plus human capital solutions. Maurice is their CEO, and he's also an associate of the Chartered Insurance Institute of the UK. He's a chartered insurer, as well as an associate of the Chartered Institute of Uganda. He has been the past chairman of the Insurance Brokers Association of Uganda, and as well as the chairman of the Insurance Institute of Uganda. Maurice has been an insurer for a while. He has over 30 years experience, and he's an insurance consultant both in Uganda and in Kenya. Maurice will wrap it up all nicely in terms of, what is it that we should be doing, or how do we mitigate the risks that have been discussed this morning. So Maurice, over to you. You're most welcome.
Thank you, Moderator Pamela, distinguished guests, ladies and gentlemen. It's a pleasure to speak to you this morning on this very topical issue of risks. Risks is bread and butter. Every day when we wake up as Minet, we're always thinking about our customers' risks, how they are mitigated, and how then they are transferred to an insurance program that should be able to support the business or the person who has those certain risks. So, of course, we've had presentations from two eminent companies, NFT, which deals with manpower, and ABSA, which is in financing. And the risks then manifest into what should be done in terms of processes. So allow me to share my slides and just try and take through what they have done and what then insurance plays a key role in helping balance the equation. In looking at the risks of manpower and financing, we start, first of all, these are big projects. And we know, as ably indicated by my friend from ABSA, the investment is very substantial, actually $15 billion into the oil and gas sector. But before we look at the specific areas of manpower and the specific areas of financing, let's just pause back and look at what are the issues that will affect this project. Some of them, the risks will be physical. Some will be already been picked as financing. Some will come from third-party involvement. And we have also said that employees who are very, very critical in this sector, without employees, you will not run any company. You've seen that COVID has affected us worldwide, and most economies have had to scale down because the employees who are very vital in running these particular organizations have had to stay home or look for mitigation for the risk of COVID. So this is then wrapped up into what are the risks. I've tried to categorize them into three that will affect many of these projects that will be within the oil and gas sector. There will be statutory requirements. These statutory requirements have been enacted by various authorities, and more specifically that touches on employees, and I'm sure the colleagues from NFT, they will be following the Employment Act. You see, the Employment Act spells how you employ, what processes you put in place, remuneration, health and safety, and all aspects that touch on employees. And then the other statutory requirement when it comes to oil and gas will be motor third party, which is basically if you are running any motor vehicle on a public road, this vehicle will have to have minimum insurance. But as we talked about minimum insurance, that's not enough. The oil and gas sector, because of the very high standards in health and safety, have very clear indications of what sort of third-party liability you will have to have if you are working within the oil and gas sector. So because of the contract you'll have entered into with them, you will have to enhance the third-party liability to fit the contractual obligation of the contract that you'll have entered into. And we know that the law requires us to insure our workers. And so the minimum standard is to take on a workers' compensation insurance. And this then provides the minimum also in terms of mitigation in case an employee is injured. Very clearly, you are supposed to put proper processes in the workplace to ensure that the employees are safe. But should an unfortunate situation occur and an employee is injured at work, according to the Workmen's Compensation Act, then the compensation should be provided to the injured party. And of course, then there will be liability. Liability by virtue of contracting, liability by virtue of other statutory requirements. You've heard my colleague in ABSA also mention about environmental liability. These will be picked under the contract and limits will be set. So as we are reviewing the requirements of the project, we'll be looking at all this and then reducing them into an insurance program. But that is not enough. Even when we reduce this to an insurance program, there are obligations that every contractor would have to take to ensure that the risks are mitigated. And these are the business processes that we normally put in place. Of course, there will be the contract requirements, and these are the contractors will be required to have that. And some of them already alluded again by my colleague will be the contractors or risk insurance. There will be the bonds. And when a bank has given you a loan facility and you have had to collateralize, then that collateral, if it is land, don't insure land. But if it's a building, if it's a machine, then that machine must also have insurance, necessary insurance, so that that collateral is there. Again, lenders' requirements, which again fall under what ABSA would be doing. Definitely, they will be looking at collateral security. They will be looking at other assets that you have. Some of the assets will be the assets you are using to perform the contract. Some of these are the heavy duty machines, the drills, and others. And then of course, there will be bonds. Bonds can either be taken through a bank, and there is a new mooted program that involves both the banks and insurance companies so that the cost to the client is reduced. So these are all areas that touch on both the contractor and the employee in that organization. And then, of course, what are the basics? We've just mentioned about the human resource. And without the human resource, we can't do anything. So we must mitigate risks by creating a conducive work environment. And this conducive work environment requires us to have work processes. These work processes spell out how people will leave home, coming to work, the type of transport they are likely to use, how do they then perform when they are at work, what safety measures are put at the workplace, what healthcare facilities will be put, like first aid and so forth. So these are all part of work processes review that help to reduce the risk. But after that, then you mitigate by taking insurance. And of course, the requirement to comply with all statutory requirements, and more so, health and safety. It is a part of the requirement that all employees are insured. And part of the mitigation requirements is to have a workman's compensation. And then, you know, the human resources are a very scarce commodity worldwide. If you want good employees, then you will need to ensure that you provide an attractive benefit structure. And some of these benefits include a group personal accident insurance. This provides insurance on a 24-hour basis to the workforce, group life cover. Again, this just ensures your life. Sometimes you can fall sick and pass on, or an accident can occur and unfortunately you pass on. So most employers, as part of their benefit structure, will provide group life insurance. Needless to say, medical insurance is like nowadays a must-have. And this has been very, very much amplified because of the COVID challenges we've been having. There are many different products, insurance products on medical in the market. What you require to do is to ensure that you have taken the right insurance for the risks you want to be covered. And of course, lender's requirements, which means all this lender who is going to lend you 100 million shillings to execute your contract, they will have lender clauses. And these clauses are actually within the body of the contract. They will require you to ensure that your insurance program is tailored to have all the clauses. And then, of course, as I mentioned before, the issue of collateral security. Collateral security will either be in the form of a building, a machine, or land. And as I said, for land, it's not insurable, but for any building standing on that land that has a value that can be insured, as well as the machines that are either sitting in factories or are part of the collateral security. So we have been saying this for a long time, and just a reminder, these are the opportunities in the sector. And this has been ably demonstrated many times when we have been on these forums. There will be different contractors operating at different parts of this pie chart, so that you find on the red circle will most likely be we, the local companies in Uganda. That's where we'll ably work. And then the more skilled companies will operate in the black area. But again, very, very specialized. I'm sure there will be some JVs that involve companies that are operating in that sector. And then the core oil and gas risks will be in the middle, the well services, wellheads, seismic services, feed, rig hire. Those will be now the very, very, very specialized firms. But the local content law requires then certain things to be done. And I'm sure the key aspect here is to involve both the Ugandan and the international companies so that it is a win-win. So for the insurance industry, all these different types of businesses which manifest in different risks and then insurable. The key is, who do you go for your insurance? Have you been subcontracted? Do you have a contract document? Can we read it? Do you have assets that need to be insured? Are you complying with all the local laws of Uganda in as far as the business you are doing, which touches on oil and gas? So this, again, just like my brother from ABSA mentioned, will create an opportunity where the local companies will also work with the foreign specialized companies, and there will be a win-win in that some of that revenue will remain in Uganda as a market. And as I will demonstrate on the insurance aspect, just like banks, they have that terminology called syndication of loans. In the insurance subsector, it's the same thing. The main local insurance company gives you terms and conditions, but his balance sheet is not strong enough to take everything that is the risk. So they will share these risks with other companies called reinsurance companies. In Uganda, we have Uganda Reinsurance Corporation. We also have PTA Re, which are all part of the mandatory sessions. We also have African Insurance Corporation. This will form part of the retention strategy so that part of this premium is retained in Uganda. Again, we, Minet and other insurance consultants, we understand the local market. We understand the international market. we have to sit with you to plan and review your risks, look at how to structure your cover to pick all the risks that are covered there. Of course, mitigation is a must because no insurer will give you cover without understanding how you mitigate. And they only want to cover those unfortunate incidents that could happen. The limits will have to be looked into so that they're in line with the exposures of the business. The broker will have to deal with the changes and extensions as lenders require. As I said, because of the nature of this particular investment, there will be a lot of lender support. And as lenders provide the revenue, they will require this to be insured. And then we can benchmark these terms and be able to make sure there's value for money. And of course, the insurance market is complex and requires very, very experienced hands to make sure that you get the right coverage for the risks of that business. And information is key. The starting point, of course, is the contract. If there's no contract, as my friend also in ABSA mentioned, any organization will have a history. We want to know how long they have been in business, which particular area, what's their experience, what's their manpower like. It's important to give all that information because that transparency then helps the insurer to appreciate the risk and then rate it accordingly. And as he rates it, he also gets support from the insurance subsector. Transparency, as I said, is key. And of course, during tendering, you would have to pre-qualify the insurers, or we would have to pre-qualify these insurers with you so that at the end of the day, you are able to make very, very informed decisions as to the quality of program that you are signing off on behalf of the main contractors. And at the end of the day, there will be different policies that cover different risks. And I've just tried to put that, again, pie chart just to help you. So a contractor will have a contractor's own risk. If it's a lawyer, he will have a professional indemnity. The engineers who are doing the work of inspection will be also taking professional indemnity. Surety and performance security is basically bonds. Defects liability in case during that period when the contract is finished, but you are on maintenance. There is workman's compensation. There is plant or risks for the contractor, his equipment that he will be using. Environmental risks, marine cargo, medical insurance, as we have talked about. Travel, because as you travel, sometimes travel up and down, there are risks of also traveling. So insurance can be got for that. There is life and disability. So your consultant will sit with you, will look at the nature of your contract, and he will pick on some of these programs that then will be tailored to ensure you have a program that protects your risk. And ladies and gentlemen, that's a summary of how insurance will relate in both NFT and ABSA. The in-country value will be that Uganda has an oil and gas insurance consortium, which is basically recognized by law under the local content and will be the vehicle of retention. And of course, if some of the retention, some of the premiums are retained in the country, of course, there's also the risk that losses will occur. And of course, the insurers will pay. But by virtue that that retention is happening in the country, it will offer employment. It will offer many other auxiliary services, like an insurer will use a bank, an insurer will use legal services, and so forth. And of course, even farmers, we have insurance for farmers. So there is a whole bouquet of solutions. What matters is to understand the risks and then go about looking for insurance solutions and mitigations of that. Thank you very much, Madam Moderator.
Thank you so much, Maurice. There's a comment here that I think you can speak to around how Minet will be able to provide or to support the insurance space, given that the UK does not want to insure fossil fuel projects. I don't know what you have to say about that, and what's your take from a Minet perspective and from a broader insurance perspective?
There's, of course, a lot of concern about fossil fuel internationally, and this is linked to climate change. Of course, fossil fuel is linked to a lot of pollution, and then the pollution, of course, is reducing the ozone layer, which in turn has a negative impact on climate change. All these floods and all these climate change aspects that we are currently witnessing is because of the degradation of the environment. And the indication is that, of course, fossil fuel plays a part. But I'd like to assure Kate that the market is ready. We are already working towards putting together an insurance program through the very many different instruments. What really matters is, are there insurance companies that will be able to support this? Some of them will not support by virtue of where they come from, by virtue of not supporting any degradation of the environment through climate change, and will likely remove their support for such. But there are many other vehicles that will be used to deliver the insurance solution for this project. And very many different organizations are putting in their tenders. Many companies are putting in the expression of interest, and some of them are even getting to the level of the conditional offer. So the project is on, and as you notice, there are two aspects that seem to be a concern for everybody, both from the financing aspect and from the insurance aspect, because those are two key areas that will deliver this project apart from the technical support. So as you can see, my colleague in APSA is very upbeat, and as we talked about, they will syndicate the loans to make sure there is available financing. And for we also in the insurance sector, we will have insurers who have good balance sheets that will be able to support what is put in conjunction with the insurance of the local market. So the project is on, we are working, and we hope to deliver this when all buttons are put on green. Thank you.
Okay, thank you, Maurice, for that. I guess we'll bring it to a close here. We've used up our time and about 15 minutes above that. I would like to thank each and every one of us that has made it this morning, and I do hope you found this useful. As the chamber, we will continue to organize this, and we will continue to share topics in due course of what we shall be speaking about.